Hi everyone, in this video we are going to start looking at an actual statement of cash flow example where we are going to have a balance sheet for a hypothetical company ABC Inc. and we are going to have an income statement for that same period. So we have the balance sheet and the income statement. We are given some additional information. The company is selling some operational asset for $4,000 cash that cost originally $17,000 and has a book value of $8,000. They are selling land for $30,000 that has been acquired for $10,000, and they are paying long-term debt in the amount of $10,000. They are purchasing additional new equipment in the amount of $48,000. They are also issuing some common stock, and they are declaring and paying dividends in the amount of $5,000. So the statement of cash flow is typically going to have three pieces. One is cash flow from operations. We are going to have cash flow from investing. And then we are going to have cash flow from financing. And we are going to analyze each piece, and we are going to start making reconciliations at the end of the video series. The cash flow from operations starts with net income. So in this case, we are going to start with net income. And net income turns out to be $14,500. As I mentioned in the previous video, we are going to add the depreciation back. It's a non-cash charge, and as a result, we need to add that depreciation back. So the depreciation charge was $11,000. We are going to add that back. Any gain or loss associated with the sale is going to be added or subtracted from operations because it's going to be considered under the cash flow from investing. So any loss is going to be added because it's any loss from a sale of PP&E is going to deflate net income, and that's not typically operational. So add loss from PP&E sale. We are going to add that back, and that was in the amount of $4,000. Why are we adding this back again? Because the net income has that figure, but we are looking at it from operational perspective. A loss from PP&E sale typically is not part of operations. We are going to consider that in the cash flow from investing. And then we are going to subtract any gain from PP&E sale, or in this case land sale. Again, we are going to consider this under investing. So we are going to look at that, and the gain or gain from the sale of land is $20,000. We need to subtract that. It is inflating our net income figure. We need to take that out. As you're going to see, it's going to be part of the cash flow from investing. In the next video, we are going to continue with cash flow from operations, and we are going to start looking at by the current assets versus current liabilities.